Microsoft, there's leaked documents since they acquired Activision. There were some documents leaked out about how they're going to integrate crypto wallets. That makes sense. A lot of games now, right? A lot of games are getting involved with NFTs. So obviously you need a wallet to store it, right? A lot of games are basically tokenizing also, or NFTing. I don't know if that's a verb, but they're making, their weapons and characters and I don't know, any accessories, right? They're all either tokenizing it or making them into NFTs, and you need to store them somewhere, right? So it makes sense. And then soon you'll be able to make purchases with crypto. I mean, overall, this is good. All right, what else is there? A couple other things. NASA, I mentioned this yesterday, but yesterday, obviously, there was a lot going on. NASA plans to use the blockchain to store data on the moon, okay, in case the Earth gets taken out by aliens or by an asteroid or something. Maybe future civilizations or aliens will find information about Earth on the moon. That's what they plan on doing. I don't know how they're going to use blockchain to store data on the moon. According to this, go put it on some kind of hard drive, and they're going to ship it to the moon. But I don't know how it connects to a blockchain when there's no internet on the moon. There are some data where, storage devices, and I don't know, maybe there are some blockchains where you could have offline mode, and then as soon as you connect it, then, it gets verified. Maybe it has to be something like that. Or they plan on putting a, satellite antenna up there that will get continuous internet from Earth. I don't know how that works. But they also plan on utilizing it to prove that we can go to the moon and it wasn't a hoax. You figure by now, it's been, 70 years, however many years, since we've been back to the moon. You figure we're more advanced, right? You figure one of those SpaceX rockets from Elon could easily go to the moon and back by now. So did it really happen before? I don't know. That's one of those things. Anyways, Binance meets with Mitsubishi, who's in the U.S., their cards are garbage. But in Japan, they are absolutely huge. They're involved with everything. Banking, financial sector, advertising, TVs, home electronics. They're like the biggest. They're the biggest company in Japan. So they're just so huge. But Binance is launching in Japan. They're gonna work with them to come out with some kind of stablecoin launch. That could be a powerhouse, right? Right now. There's not a lot of stablecoins that people use, but who knows? Who knows if this spurs up another one? We know PayPal just released theirs. I don't know how many people are using PayPal's stablecoin. I would not trust PayPal stablecoin, so I'll never use it. But USDT has its controversies. USDC has its controversy. I mean, there's a lot of controversy everywhere. But maybe Mitsubishi stablecoin could be good and be adopted. I don't know. The federal government shutting down once again. We just went through this thing. We just got done with the debt ceiling crisis, right? And how everything was going to shut down and we can't pay our debts and can't pay interest, can't pay anything. We finally got over that, and right now we don't have a debt ceiling. Okay, we're not going to formulate debt ceiling until 2025. So right now we're accruing like $1 trillion in debt every month. It's at a unsustainable rate and unfathomable rate also. And this morning, 134 billion more bonds just hit the market because of this government shutdown. I guess they're looking for 134 billion to pay Congress people just to operate. I don't know if it's just Congress people, but this is what they're looking for. They're trying to raise $134 billion, right? They're borrowing by issuing notes and treasuries, right? That's exactly what this is. And I just don't get how we keep ending up in the same position. See, this is what happens when you don't have to take responsibility. Okay, so for us as individuals, we can't be doing this. okay, there will be consequences to endless borrowing. Okay, if you can't repay your interest or debt, you will go bankrupt. Okay, but for the federal government, somehow they could just issue more notes and borrow more, or they could turn on the printer and print more. That's the only difference. There's just only two ammunition that the government can do: issue more bonds or print more money. See, we don't have those options as individuals, but the government does. And they just keep doing it now. It's like a free-for-all because there's no debt ceiling. It's like they can just do whatever they want. And this can't be good. This can't lead anywhere that will be good. This will only lead to disaster. So I was thinking about this morning, looking at this. 10-year Treasury yield rises, right? Normally, if there's a lot of fear in the market, Treasury does not rise. Treasury interest does not rise. And here's why. Because if it's a very fearful environment, people will flock to Treasuries because they flock out of risk-on assets like tech, like Nvidia or Apple or Tesla. They flow out of there and they put their money in Treasuries, right? When there's a lot of fear. But how come right now, when there's a lot of fear, Treasury rates are still going up? Well, it's because the government keeps on creating more notes and bonds because they need to borrow more money. And they keep issuing more and more and more. And the demand is not there. There's only so many people that will buy it. So what they're doing is raising, basically the interest rate is being raised to entice more people to buy, which in essence allows the government to borrow more money, right? That's what's happening. And what's worse is we have an inverted yield curve. So you can see, even though the 10-year Treasury yield is at 4.542%, the highest level since 2007, the 2-year is even higher at 5.127. You're not supposed to have it like that. You're not supposed to have it where the shorter-term Treasury has a higher yield than a longer-term Treasury. That doesn't make any sense. Right? Well, it does, because that means there's a lot of fear. Okay? There's a lot of fear. So this whole thing, everything with what's going on with yields is all screwy right now because we're in a situation where the U.S. government is in a screwy position. I mean, I don't think we've been through any other recession like this before. We really haven't. It's just a plethora of things going on, right? Like now we have no debt ceiling, we have unlimited printing, and we have this issue with inflation that the Fed is trying to resolve with higher rate hikes, right? But it's not going to do anything if we keep accruing more debt and we keep printing more money. So, everything's just kind of screwy right now. It's really, really screwy. So here's an interesting fact. Every 0.1% or 10 basis points that this goes up by means that the federal government has to pay $30 billion more per year in interest payments alone. Just interest. That's 0.1%, right? I'm sure Eric calculated things, but the interest payment after 2023 will be the number one cost for the U.S. Okay, right now it's still military. Our military budget is huge, like $900 billion, right? But after this year, our interest payment alone will be over $1 trillion. It'll be the highest cost that the U.S. government has, and it's not going to stop as we issue more and more bonds and notes and treasuries and so forth, right? It's wild how this is going.